All right, well, good morning, everybody. I have the honor and pleasure to introduce Congressman Gregory Meeks, who hails from the 5th District in New York, which is primarily Queens. He is a senior member of the House Financial Services Committee, and most importantly, I think for our industry, has been one of the really leading advocates for responsible innovation and legislation to support that innovation, as well as financial inclusion. And so we're going to have a conversation this morning to talk about the upcoming election, the potential impact on Congress and the next Congress, and his role going forward, and most importantly, what we see of the new legislation in the new Congress and the opportunities for the online lending industry to move its agenda forward. So please join me in welcoming Congressman Meeks. So first, let me thank you for making the effort to be here today. As many folks know, Congress, or at least the House of Representatives, is now out of session. We're very much into the political season, but you've taken the time to come back to Washington and share your thoughts with us. So we very much appreciate that.
Good to be with you. This is very important.
One thing, you've taken a leadership position on a number of fronts affecting the FinTech industry and online lending. Can you talk both about your personal experience and kind of what got you involved, and then the impact that you see FinTech providing for districts like yours, as well as other districts around the country, potentially where there's banking deserts and other underserved areas?
Well, of course, you come to my job, and as anyone does in their job, with your own personal experiences. And I tell everyone, long before I was a member of Congress or an attorney or anything else, I grew up in the streets of East Harlem in public housing. Parents who migrated from the South to the North, looking for greater opportunity for their family. And so I saw the struggles of my family and my father trying to work 2 and 3 jobs at the time to keep the family moving ahead. And I saw the difficulty that he had oftentimes with getting access to capital to do certain things when he needed it. I mean, if he built his way up to where he had a small school bus business, and I could see at times when a van broke down or something and he needed some access to money to do certain things, he didn't have it because he didn't have a lot of money and he was just trying to hustle to get things done. And so he would have to go to one source. Either you have a legal source you go to or an illegal source that you had to go to. And I've seen him do both. And one was much better than the other, of course. And so growing up and looking at my relatives, et cetera, I knew that whether you were a small business owner or an individual just looking to help your family, that at times the key was having access to something in cases of emergency. And I watched him as we moved from public housing to buying a little small house in Queens. The necessity then, especially then, in trying to put me and my sisters and I into college or through college or what they need to do this. So that got me interested in a lot of what was going on. And then strangely enough, while in law school here in Washington, D.C., one of the things that was able to get me by, I get in trouble sometimes in Congress because they rent to own business. But when I was in college, if it wasn't for rent to own at the time, me and my law school roommate would not have had any furniture in our apartment. And so we were able to take advantage of that, and that helped us through the 3 years of law school, and it made a significant difference. And so I carried that with me when I came here to Washington and served on the Financial Services Committee. Also, trying to bring a perspective of someone who's gone through a lot and, what was good for me, and thereby I would think would be good for others. And then, dealing with the financial crises that we went through, all of that becomes part of what we're doing here. And lastly, just thinking of technology. Technology changes every day, and it opens up and has the potential of opening up doors. And, Phil mentioned my grandchild that is now here, and I couldn't help when she was born starting to just think, what will her world be like because of technology, and how will it benefit her because it has the opportunity to really benefit and push people up. So that's basically, in a nutshell, who I am and how I got here.
That's great. That's great. So we're here, 4 weeks away, literally, from the midterm elections. Depending on what poll you read, what have you, it looks like the House is increasingly likely to come back into Democratic hands. The Senate, I think, is more of an open call. What is your perspective? Obviously, you talk to your colleagues. You have a really close ear to what's happening. What's your perspective and any predictions on what's likely to happen in 4 weeks?
After 2016, I don't make predictions anymore. What I do is just go out there and work hard. You don't count any chickens before they hatch. And unfortunately, we are living in an unprecedented time, I think, in our history. And the American public is, as well as indicated by Congress, and I think that the Congress is a true reflection of America, where we are at such odds, and there's so many different things that are going on. I don't want to make a prediction. I like to be, if you ask me how I feel about it, I like how it feels out there generally, at least in the places and the areas that I go to campaign in. It feels to me a lot like 2006. When you've been in Congress 20 years and only been in the majority 4, and you realize what took place then, that, I relive that all the time. So it feels like 2006 to me, if in fact we get out there to work. But there's so many things that can still happen in the next 30 days that we've got to work hard. So I keep hearing about a blue wave. I don't know about a blue wave. But I go by this by looking at what can be and what I hope will be. If we take the majority back, that makes a tremendous difference, I think, I know it makes a tremendous difference for me, because if you have a choice being a ranking member or chairman, you take chairman every time. For me, if we take back the House, what does that mean? I would hope that we don't make the same mistakes that I believe that my Republican colleagues have made over the last few years in the majority, that we've got to find a way to bring America back together again. We've got to find a way where we can actually have a dialogue and conversation among one another and get back to the position of compromise. Because right now the problem is we are not compromising enough, and that's what's causing us to further split. And you've got a scenario where either the extreme right or the extreme left has a substantial control. If we take back the House, it's going to be because of the fact that we've got what we call new Democrats and blue dog Democrats would have won seats that had previously been held, and those are individuals who are more in the middle, and I think would be more willing to compromise and try to make sure that we're moving America forward for the benefit of everybody. And I think that's what's at stake here. If we don't take back the House, I believe that we're going to stay in a scenario where the country continues to be divided and divided further because, because in my estimation, with President Trump, who clearly is pushing us to one side or the other, and then others who are going to side with him, it further divides our country, as opposed to having the checks and the balances to try to bring us back together so that we can have a real dialogue and conversation and make sure that this place is better. What makes us the best country, in my estimation, because I sit, as you know, on financial services, but also foreign affairs, and I travel around the world. What's different about our government, or has been, is that we've been willing to work together and try to figure it out, the bumps and bruises. Now, saying all of that, and saying and knowing the difficult times in which we currently live in, I bet on America. Because this is not the first time that we've had these kind of differences or we've had this kind of divide. But we've always been able to come out of it, and I think that when we eventually get out of it, We are a better country as a result of it. And so, yeah, I'm hopeful that we take back the House.
Well, let's assume for purposes of our discussion that happens. And let's talk about the committee that you're on, House Financial Services Committee. Maxine Waters, I think, is in line to be the chairwoman. What do you see your role being on the committee, to the extent you have a view into that yet? And then I want to talk maybe about the dynamics within the committee, kind of party to party, but then also within the Democratic Party and the Democratic Caucus, because I know, certainly we've seen with some of the legislation impacting FinTechs, there's been a bit of a split within the caucus on some of these issues.
So first thing for me, if we take back the House, is where do I fit? You look at seniority, and I see myself, depending upon what my colleagues before me do, possibly being the chair of the Financial Institution Subcommittee on the Financial Services Committee. That's the way the numbers could look out. There's one possibility that doesn't happen. If that doesn't happen, then I see myself sitting on the capital markets and the financial services subcommittees, whether I chair them or not. But I look forward to that, being a representative from New York. I think it's important that we have a better language and a better dialogue. I just don't see how we can go and be against all of our financial institutions and say that they're the bad guys. In fact, from New York, if Wall Street left tomorrow, all of New York City, and I think all of the nation, would be in trouble. That's the big issue now with reference to Brexit over in London, where the financial institutions are going to land. Will they leave the UK? And if they did, what does that mean for the UK and its economy overall? Those are tremendous issues. So I would love to be on, dealing with those committees and dealing with financial institutions and talking about how I think we've got to change the dialogue, because, the dialogue Main Street against Wall Street, for example, it shouldn't be that, because without Wall Street, Main Street would hurt, and without Main Street, Wall Street would hurt. So we've got to change the dialogue that we're having and try to make sure that everybody is working collectively together for the benefit of the whole. And I look forward to being able to do that as a chair of the Financial Services, Financial Institutions Subcommittee. Now, what is the makeup of if we were in charge, what is that? Yes, Maxine Waters will be the chair. And I think one of the things that Maxine is focused on and trying to do, one of the things that is most important, the CFPB, for example, is tremendously important. And Maxine has indicated that she wants to restore some of the protections for consumers that it seems as though the current director is trying to remove. And there's some things that are taking place, if you talk to some folks internally, that is problematic. And I think that we would be looking to try to fix and shore up the CFPB. And to me, that is important, because that then gives the consumers some credibility and, some I shouldn't say credibility, I should say some confidence that somebody's on their side and going to help level the playing field. That's important, to have something on both sides, because before the CFPB, there was no one on that side. I was one of the biggest supporters during the financial crises of the creation of CFPB, and I think they should be back on their mission in that regards, because then that helps everybody across the board. It makes sure that the good lenders and the folks that's good in the services, they can move forward, and those that are bad are doing things that hurts individuals, we can make sure that there's a remedy there. And so I think that that's one of the things that the committee would move on. But I also think that, on the Financial Services Committee particularly, there is a balance because of the number of members that's on the committee, and they all come from different political viewpoints. On the Democratic side, you're going to have, yes, you'll have some new Dems and some blue dogs and some progressives. And so that makes it important for us to have internal discussions through all of us to try to come up with something to push something through if we want to accomplish something. And yes, I think that also it will be helpful, because as quiet as it's kept, there's a number of us on the committee from both sides of the aisle that we've always talked to one another, and we've always tried to get something done among ourselves. And there's something that may come up with, at that time between leadership or something of that nature that might have prevented a bill that goes through. But we've developed some friendships on the committee, and I think that no matter what takes place, we'll continue those friendships and those dialogues and trying to make some compromise to push this thing, push some bills through that we can do in a bipartisan manner.
Do you see any particular issues where there can be that kind of bipartisan action and maybe some early wins? This last Congress, you saw the House move under Chairman Hensarling's agenda, a very, very broad reform of the CFPB that would have substantially changed it. Obviously, the Democrats were not supportive of that. Are there some things, though, where there can be some broad bipartisan support that can come out of the committee and potentially have a chance to move in the Senate? Because so far the Senate's been a graveyard for most of the things that have come out of the House in terms of financial services, other than relatively minor tweaks to Dodd-Frank.
Yeah, I think that there are. Number one, I think that, and my hope would be, specifically for this audience, that we could come up with a charter for online lenders, something that can level the playing field and make sure that we can open doors. I think that kind of dialogue and conversation is tremendously important. I think that we can try to figure and work that out. I think that we can work out the CFPB issues. And I think that we need to make sure that there's rules and regulations that go out there so that we can eliminate uncertainty. Because when I talk to most of the financial institutions, they're not against the CFPB. They just want to know what the rules are so that they can have certainty in knowing how to move forward. So that I think that we can agree upon that. I think that those are bills that we pass. I think that we'd be able to pass. I really think, and we've got to figure out the Senate side, and I know it's something that I would be working on. We dealt with in a bipartisan manner because me and McHenry have worked closely on the Madden fix. And there's been some recent studies that have come out to show how Madden has hurt access to capital for people in low-income communities, et cetera, where there is lack of access to financial institutions. I would think that we'll be able to have some real dialogue and conversation. I know on my side of the aisle, I've been talking with members already in that regards, and we're trying to work up some language. And we've been talking with some of the other side also. So I think that, because it's important, one of the things that, reason why I think that that's the case also is because some of the things that affects urban America, my district, also affects rural America. Because just like urban America oftentimes don't have access to capital and they need certain things, the same is true of rural America. And that should bring us together so that we can focus on, in politics, say all politics is local. Well, in urban, I'm looking for urban agendas to make certain things happen. But I found out by talking to some of my colleagues who have virtually nothing, whose districts are nothing like mine, but there's some common interest that we have, and that should be able to bring us together to come up with I think, some meaningful legislation that's going to be beneficial to all of us.
So let's talk about the Madden fix legislation that you and Congressman McHenry have introduced and promoted and actually got through the House, which was a significant achievement on a somewhat bipartisan basis. Mostly Republicans, but some Democrats came along with you on that. Is there any prospect, I think we all expect a fairly contentious lame duck session, but is there any prospect in that session that there might be movement, or do we expect the fight or the debate over the Madden fix will have to carry over to the next term?
I think that it's going to go over to the next term. If I'm to be honest, the Senate's it's just stuck in the Senate right now. We would have to see what the new formulation is. I support them trying to work something out and still continue. Has to be some changes that the Senate may want after, to get something out that we have to agree with. I just can't see it taking place in a lame duck session, especially if there's a flipping of the houses, et cetera. So I think that it's going to be a new Congress that has to come in, and that new Congress, I think, is going to consist of as I indicated earlier, a more moderate Congress. And if that be the case, then you have the willingness to push bills forward and to compromise. So if I was a individual that was a betting man, I would say it's more likely that something will happen in the next Congress, but not in the lame duck session.
And in terms of what might happen, I know you've certainly supported and fostered some of the discussions that have gone on in the Senate, as well as between industry groups and consumer groups. Is there a compromise out there that's reachable? What are kind of the contours of that, or the issues that you see as needing to have the bridge gapped, the gap bridged to get to a real compromise?
Let me tell you what we've been doing now, because quite naturally I've had some groups that come after, and when they saw I was supportive of the bill, who did not think that that was the right thing to do, some consumer advocates, et cetera. And the way I try to approach these things is to sit down and to talk to them. And so what we've had is a dialogue that's going on now with many individuals from FinTech groups and organizations to sit down with some of the consumer groups, because I think that what they want is the same thing, really, and to have a dialogue and conversation now. So we've had a number of individuals talk, for example, with the head of the NAACP or the National Urban League, and started talking things through. And thus far, there has been, a continuing conversation, and individuals on both sides seem to be, and they really want to get something done. And so this, if we can continue this effort and join a few other consumer groups where they then pull back on some of their objections, and we have some others to try to make sure on the other side, some of the FinTech groups to understand what we're trying to prevent. There's a compromise that then works. And I think that I see that coming forward because initially the meeting started in my office and we had this dialogue, and then I've heard from others that dialogue is even continuing now without me being present or anyone else, because the sides really want to get something together. And sometimes when you do that and you get the folks talking from the outside, it makes it easier for those of us on the inside to say, we concur, this is a piece of legislation, and you take some of the politics out of it, and you take some of just, we want to stop them from, or they want to stop us. You got to take that out of it. And I think that that's what we are trying to do now, so that we'll be ready for the next Congress.
We've talked primarily now about the Madden bill, or the Madden fix. The other legislation that's been introduced in Congress that is of, I think, significant concern to this audience is legislation to address true lender issues and to clarify that loans that are made by a bank in a bank partnership relationship are not only valid when made under Madden, but that are able to kind of carry with it into the secondary market the same federal preemption rights that the bank had. And even though they're made in the context of a bank partnership arrangement, the bank is the true lender, and therefore it has kind of the loan carries all the rights and powers that the bank has in making that loan. It hasn't moved in the House this far. I know you're not signed on as a co-sponsor at this point. Is that something you see as being part of this agenda, as maybe part of a broader compromise among industry and consumer groups? Something that is out there as a possibility for the next Congress?
Yeah, we've got to work on that. And I think the other issue is, of course, the states are concerned. The states are concerned about preemption of states' rights and et cetera, and setting certain standards, et cetera. So that's got to be worked out. So we've got to deal, and it's a little complicated, to be quite frank, in that regards. So, whether you set something that's a ceiling or a floor, whether or not, because certain states are more stringent than others. So that's a dialogue and conversation that we've got to try to figure out, and we've got to work collectively together. Quite frankly, my state is very, very aggressively, trying to say we've got to protect the standard that we set in New York.
And we're going to hear later today from the superintendent of the New York DFS, no doubt on those issues.
Yes,
so
that's correct.
Certainly,
so
very vigilant.
it's something that we got to work on. But it's difficult. I mean, to try to straddle the two.
We heard earlier from the OCC about the FinTech charter opportunity that they are pursuing and now are receiving applications. You've spoken about that charter, that concept, but a key element of what I know you focused on is the concept of financial inclusion, the role of the Community Reinvestment Act, and kind of the ability to use the charter as a way to, again, further access to credit, further access to the banking system. Maybe some thoughts on where we are with that, and that also brings into the debate the state issue, because the New York State has also rejoined their litigation about the FinTech charter.
Look, this is about access to capital. This is not and should not be a political issue, because this is something that was brought up under the Obama administration and it continues under the Trump administration. So we've got to figure this thing out. Having a charter so that people don't have to deal with 50 different rules and regulations, I think would be tremendously important, particularly the fact that in districts like mine, where you're getting, there's a lot of banking deserts that are popping up. And so a company doing business in Iowa, may have their domiciled in Iowa, but doing a lot of business in New York. We've got to make sure that happens. But if they're doing business in New York, there could be CRA incentives, because if they're doing a lot of business in that state, we want to make sure that the individuals where the business is being done, that local community is gaining benefit and access therein. And that's why we've got to relook CRA generally anyways, because it's a bill that's over 40 years old, and the times and where we were with reference to technology and the economy, et cetera, 40 years ago is not relevant to today. So it has to be updated. The way that FinTechs and online lending is moving is something that I think we're at the beginning stages of, really. And so therefore we have the opportunity now to create a system that's nationwide with the OCC charter, if that's the way we move. And I've generally been feeling that that's the appropriate way to go, as well as putting in putting in the incentives, as well as making sure that we're creating a system that also is protective in nature, is moving. So a couple of things that I think is important, since this is the beginning. CRA being, and everyone being on the side of creating or having a part of CRA and having it so that communities can benefit. It gets folks in. I also think that what helps with that, and here's where I talk all the time, is about diversity. Diversity is tremendously important at the beginning of, with this industry. And so whether it's, and I know most of the companies now are still privately held, they're not public, but to the degree that folks understand that early on to diversify their boards and hearing voices of women and minorities becomes tremendously important. And I have a bill that encourages disclosure. I don't go as far as the California bill.
I was going to ask you if you have thoughts on that initiative and where you see that going.
Yeah, I don't go that far, because I think that it's going to run into a lot of legal ramifications and possibly endanger or prevent you from obtaining what the objective really is. I think that if, in fact, you require the companies to disclose to their shareholders and others what the makeup of their boards are, then I believe that in today's age, the shareholders will look and compel the fact, many of these companies to make sure they're hiring women and minorities. And so my bill is more absolute disclosure, so there's transparency in that regards, and as opposed to where the California bill goes.
We've talked generally about online lending. An area that recently saw significant development is the small business lending aspect of online lending. California just passed legislation to require fairly extensive disclosures around certain small business loans, merchant cash advances, other kinds of transactions. There historically has not been a lot of regulation of small business lending. California really is the first state to make that kind of a significant addition. It's subject to rulemaking, so we don't know all the details yet. But thoughts on what the appropriate role of the federal government is versus the state governments, and the risk that we face of kind of new balkanization of regulation in small business lending, which is really, I think more than any other space, we've seen online lenders fill a need and provide capital in a space that traditional banks, because of the cost structure, really have avoided over the years. So loans under $250,000, $100,000, online lenders have really filled that gap. Any thoughts on
I think that we've got to move, because we're talking about access to capital. We're talking about we can't keep doing things the way we did them 10, 15, 20 years ago. So I think you can't stranglehold, what the future holds with reference to online lending and the availability of it. I think if it's done right, number one, for me, sometimes when you're doing things online, and here's where you have to try, and talking to some of my colleagues who may be on a different side of the issue than I am, because they want to make sure that we don't have technically redlining. But most of the time when you look online lending, you can say that it's colorblind. It's, it's blind as to what reference to your sexual orientation or what your sex is. It just goes by sheer numbers, and it can give someone the benefit or access to the money for a small business than you would have otherwise been able if you had to walk into a branch. So that makes a tremendous difference. And so we've got to, figure that out. The small business loan is, because we see more, what makes this economy the greatest economy that it is, et cetera, is more people that are in small business. Small business is the greatest employer of individuals. So we've got to figure out how to help them more. I just go, in my district, one of the things that we fight for is someone that has an idea that's small and want to be able to grow that idea. They need to have the availability of having capital without, and because some of the issue always becomes in regards to what the interest rate is, et cetera. And what I have found, for districts like mine, unfortunately, most of the folks don't have a parent or family members that can lend them the money. That's what some folks have. And what I have found is that most of the individuals either max out on their personal credit cards. And that's not the way that you should be doing a business either. So I think, and I've known individuals who've had a small business, they maxed out everything on their personal credit card. In fact, I had somebody in my office the other day, and they're so in debt now, and they had to put their house up, so they're about to lose their house. But if they had done it another way, gone to someone that was able to give them that small business loan, and they could have done it online. When we start talking about some of you guys in this room to them, they wish they knew about that opportunity before they did what they did. And so we've got to make sure that that word is out there to a greater extent, so people who don't know about the availability of doing some on-site lending and online lending, that's out there, because I think that's tremendously important. The opportunity, the access to the capital is important. I've talked to a number, and how, because it also, what I'm finding that you can do with online lending and many of the companies out there, you can determine a person's credit worthiness differently than is currently determined by the 3 credit bureaus and how others are doing it. Because you can see how people pay their bills, and it's not traditional. So we need that new, fresh way of thinking on how we can do things differently than we've had, so that we can help people that otherwise wouldn't receive the kind of help that they need.
One of the other things related to small business that's frankly been out there since Dodd-Frank was passed in 2010 is a provision for the CFPB, BCFP, depending on your perspective, to issue a rule under the Equal Credit Opportunity Act to collect certain data about small business loans, women and minority-owned loans. Any perspective on what the role of the committee is likely to be next year in oversight of the Bureau with respect to that kind of a rulemaking initiative?
Well, I think that if Democrats are in charge, we want what we believe, what we know was the original intent of the agency and how to move forward and the kind of oversight that it should have, which I think is being removed now by the current administration and the current head of the CFPB. And so the only way to fix that, given where we are now, is probably by legislation. Now, here's the problem in my estimation. And here's the problem with the CFPB. And this is something that we've debated at its creation. And I think I'm on probably, it's a divided issue, and I'm probably on the other side of some of my Democratic colleagues. The problem, I think, is, in my estimation, that we have one head of the CFPB as opposed to having like 5 directors so that you could take the politics out of it, irrespective of who the president is. The CFPB shouldn't be a ping pong ball. Whereas if you got a Democratic president, you can put in this head and he's going to do everything that the Democrats want. And then you get a Republican president and then they put in another person and they then try to get rid of, or that term expires, and they want to get rid of that person that took place here, and they fight against them. And so then it swings back and forth. That is not good for anybody. You need certainty. And that's what I've learned in this industry is people want to know, at least the good folks want to know what the rules are, have some certainty. So if you had a board of directors, whether it's 3 or whether it's 5, and they had to vote on it and then come together, I think that would make a substantial difference in how the CFPB operates. That was I think the initiative of coming in was to have that kind of impact. So I am a proponent of changing the very setup, the makeup of the CFPB to 3 to 5 directors. We can talk about the number and you can talk about the appointments, as opposed to having one where we're swinging back and forth.
And that's a proposal that obviously passed the House during the Obama administration, has come up several times. Do you have any sense of, could we get to 60 votes in the Senate to move legislation like that, which I assume is what it would take in the new Congress?
Look, the Senate, I often say, when I travel from the House side and I go over to the Senate side, I got to make sure I carry my oxygen mask because the air's thin over there. So, so I can't, actually predict. But I would hope, because to me, some of the issues, as I indicated earlier, are not political issues, or they shouldn't be. Now, I mean, we can debate and then try to come to a conclusion as to, because what has started a lot of this is the financial crisis, and no one could deny that there's something had to be done after you had the greatest financial crisis since the Great Depression. Some can, look at individuals who were severely hurt by payday lenders and, rollover loans and things of that nature. And so, what they look at as 300-400% interest rates, that's not good for anybody. I think that we could figure this thing out, and we can try to figure out interest rates that are, that are good for the companies, because no one gets in this, and that understand the risks that you take with certain individuals, so the interest rates will be higher. You can't get the same. This is in a business. You got to make sure people are making money, that's in this business, so you've got to understand that also. Nobody just giving money away. That's not going to happen, nor should it. So that's the kind of dialogue that I think that we could have as reasonable folks. So understanding what that number is, that should be debated. We've had that debate to a degree in committee, and I think that debate is going to happen again. As I said, I think that the makeup of this Congress is going to be different in that regard, no matter who wins.
Well, Congressman, I think we're just about out of time here, but I do want to leave it, I think, on that hopeful note, a possibility of real action that could impact this industry, and hopefully a bipartisan path forward, something that we haven't seen in quite a while. So thank you very much.
Thank you.